Hello and welcome to our conversation on accounting. The focus of this discussion is impairment of assets or accounting treatment of impairment of assets. We know that impairment of asset is an important aspect of accounting where every company is required to show the impairment loss. And impairment is governed by Ind AS 36. According to the Ind AS 36, the impairment loss is the amount by which the carrying amount of an asset or a cash generating unit exceeds the recoverable amount. So let us revisit this statement again. The impairment loss is the excess of the carrying amount over the recoverable amount. And that loss has to be treated as per this particular accounting standard. So what is carrying amount and what is recoverable amount? The carrying value is also known as the book value or the net value or the net block. The carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation or amortization and accumulated impairment losses also. So this is the value shown on the books on the balance sheet. The recoverable value. The recoverable value is the amount of an asset or a cash generating unit which is higher of the following: the fair value or the value in use, whichever is higher. So that means at the time of impairment test, the company is required to find the recoverable value every year or whenever they undertake the impairment test. Why is the recoverable value required? Because the recoverable value is compared with the carrying amount. So the recoverable value has two components. One is the fair value and the value in use. And both need to be calculated, and the higher of this will be treated as a recoverable value. What is the fair value? In fact, there is a separate accounting standard in there is 113, which gives a detailed principles with respect to the concept of the fair value. But here we are just trying to pick up the definition of the fair value. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants. In other words, this is also called an arm's length price. That means the price at which a transaction happens between two unrelated parties in a market. So fair value of that asset or the cash generating unit has to be calculated. And then we also calculate the value in use. Value in use is, we know that asset is anything which has the ability to generate future cash flows. So value in use is said to be the present value of the future cash flows expected to be derived from that asset or the cash generating unit. So find the value in use, find the fair value, then find the recoverable value. The recoverable value is the fair value or the value in use. And once the fair value and the recoverable and the value in use is calculated, and then we derive the recoverable value, we compare the recoverable value with the carrying value. And if the carrying value is more than the recoverable value, the asset is said to be impaired. That means there is an impairment loss. So this impairment test, this process of finding recoverable value, then comparing with the carrying value, the entity shall assess at the end of each reporting period whether there is any indication of that asset may be impaired or not. That means you have to undertake an exercise. If such exercise shows that there is an indication, then the entity shall estimate the recoverable value. So this entire process is called impairment test. In undertaking the impairment test, the entity shall consider minima, okay, the following indications: within the organization, internal conditions; outside the organization, external condition. Are you getting any signal that the value of the asset has gone down? For example, external conditions. We all know that, in 2020, 21, there was a major impact of COVID. So there is an external condition for the impairment. Sometimes internal conditions are you're able to see from your operations that the machine is taking longer time to produce the same thing, or lots of what you call difficulties in the production processes. So these are the internal conditions and external conditions one need to observe while undertaking the impairment test. The moment you have undertaken the impairment test, determine the recoverable value, compare the recoverable value with the carrying cost, and you derive the impairment loss, then the question of recognizing the impairment loss comes into picture. If the recoverable amount of an asset is less than the carrying value of the asset, the carrying amount of the asset shall be reduced to the recoverable amount, and that reduction is called the impairment loss. Once again, if the recoverable amount of an asset is less than the carrying value, then the carrying value of the asset shall be reduced to the extent of the impairment loss. That means the carrying value is brought down to the recoverable amount. The reduction in the value of the carrying value to the recoverable amount is known as the impairment loss. And where will you show that impairment loss? According to that, in days 36, after the recognition of the impairment loss, the asset shall be shown to the extent of the, or to the amount of the recoverable value. So the impairment loss has to be shown in the income statement because of the conservative concept. We know that expected losses have to be shown in the income statement. So therefore, impairment loss has to be recognized in the income statement in the year in which the assets have been impaired. And after this has been recognized, for the future calculation of depreciation and other related issues on the property, plant, equipment, or any other asset, so the value of the asset will be now, the carrying value of the asset will be the original cost of acquisition minus the accumulated depreciation and minus the accumulated impairment loss. So let us see how some companies show the impairment of assets. So for that purpose, we'll pick up a company like Tata Steel. And Tata Steel, in their accounting policies, in the notes itself, very clearly mentions about the impairment. Before impairment, it's not a bad idea to understand that the company charges depreciation. The company is charging depreciation on the basis of the straight line, on the basis of the straight line method. The depreciation is provided so as to write off on a straight line basis of depreciation. And once the depreciation is calculated, then we get into the impairment. The depreciation on the assets which are used only is shown, and the useful life for the Tata Steel for building, the estimated useful life is 60 years, for roads 5 to 10 years, for plant and machinery up to 40 years, vehicles and aircraft 5 to 25 years. So therefore, these assets are depreciated by using straight line method to derive the carrying value. And then the impairment policy at each balance sheet date, you can see that the company reviews the carrying value of its property, plant and equipment and other intangible assets to determine whether there is any indication of carrying value of those assets may not be recoverable through continuous use. In other words, they're comparing the possible, they're undertaking that they will undertake that impairment test at the end of each year. And if such indication exists, the recoverable amount of the asset is reviewed in order to determine the impairment loss. So therefore, companies, it is mandatory, of course, to follow Ind AS 36 that every company has to undertake this impairment test, the test of comparing the carrying value of the property, plant, equipment, intangibles with the recoverable value. And if they see an indication of the carrying value less than the recoverable value, then of course there is a need to show the impairment loss. So therefore, impairment is a very important exercise for the purpose of preparing the accounts. Now let us understand the impact of impairment loss on the financial statements, balance sheet, income statement, and cash flow statement. For that purpose, let us take a very simple exercise. The focus of this, observe the opening balance sheet, okay? So the sources and assets are 450,000. The company is having one property, plant, equipment, plant 1, and there is an accumulated depreciation of 20 or 40,000. So it is 20% on straight line method. In the year 2, that means for the current year, observe, our focus is only to observe the depreciation and the impairment loss. Depreciation and impairment. So depreciation, we can see that the company calculates depreciation on SLM by using 20% depreciation, and depreciation therefore will be charged in the income statement as an expense, and the accumulated depreciation increases to that extent. So what is the carrying value of the asset now? The carrying value of the asset is 200,000, the cost of acquisition minus the accumulated depreciation, which is 80,000, okay? The minus the accumulated depreciation, that is 40 plus 40, 80,000. So the carrying value is 120,000. And the recoverable value, in this example, we are assuming that recoverable value is given. So recoverable value is 85,000. So the carrying value is greater than the recoverable value. Since the carrying value is greater than the recoverable value, according to the standard, accounting standard, you have to bring it down to the recoverable value. So the reduction in the carrying value to the recoverable value is treated as the impairment loss. And as per the accounting standard, that impairment loss has to be shown on the income statement in the year of that recognition. So therefore, it is shown here in the income statement. And the value of the asset is reduced to the extent of the impairment loss. Now we can see the value of the asset, the carrying value of the asset is 200,000 minus the accumulated depreciation and minus the impairment loss. So therefore, which is equal to the recoverable value of the asset. So we can see that impairment affects the income statement and affects the balance sheet, there is no direct effect of the impairment on the cash flow statement. So the impairment loss is shown in the income statement. The profit to that extent reduces, and the value of the asset reduces to that extent. An impairment is a regular recurring activity. The impairment test has to be done by the company regularly and show the impairment losses. This can be explained due to rationalize or explain by saying that this is due to the conservative convention that the financial statement should follow. So therefore, impairment is an important exercise of a company, and all listed companies are bound to follow the impairment exercise.